Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Champion Real Estate Investment Trust Annual Report. And Champion Real Estate Investment Trust is a trust that specializes in owning and investing in high-quality, income-producing commercial properties. The company's primary focus is on Grade A office and retail spaces located in prime areas. Its portfolio includes two notable Hong Kong landmarks, 3 Garden Road and Langham Place, as well as a joint venture stake in 66 Shoe Lane in central London. The trust offers investors direct access to nearly 3 million square feet of prime commercial space, providing a diverse range of investment opportunities. By investing in Champion Real Estate Investment Trust, individuals can gain exposure to the income-generating potential of these high-end properties, making it an attractive option for those seeking stable returns on their investments. The company's business and services include owning and investing in Grade A office and retail properties, providing direct access to prime commercial space, offering joint venture stakes in select properties, generating income through rental yields from its portfolio of properties overall. Champion Real Estate Investment Trust is a reputable investment vehicle that offers investors a unique opportunity to participate in the growth potential of high-end commercial real estate. The significant increase in Champion REIT stock price by 45.99% over the past year can be attributed to several key news events and market sentiments. One major factor was the company's earnings call in February 2026, where it reported stable occupancy rates across its key properties, proactive refinancing efforts, and strategies to refresh its tenant mix. This forward-looking approach likely reassured investors about the REIT's resilience in a challenging market. Additionally, a positive sentiment among investors towards the Hong Kong real estate market was driven by expectations of upside potential in home prices, profit margins, and sales for 2026 and 2027. This broader positive market outlook likely benefited Champion REIT. Furthermore, market anticipation of a faster pace of interest rate cuts in the United States contributed to a generally positive market performance in October 2025, supporting Champion REIT stock price. Despite some negative news during the year, such as a Moody's downgrade and a decline in interim distributable income, the market's strong positive reaction suggests investors may be pricing in future growth and perceived asset quality. Overall, these factors combined to drive Champion REIT's significant stock price increase over the past year. Champion Real Estate Investment Trust maintains a market capitalization of $15 billion, broadly in line with the industry peer group. Champion Real Estate Investment Trust trades at a lower price-to-book ratio of 0.39 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 29% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased, while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This makes the investment case highly unfavorable. The company have a dividend yield of 5.2%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline in a business can be attributed to several key factors. On the negative side, an abundance of office supply in the market and shifting consumer behavior have led to a decline in revenue. Additionally, decreased net property income, rental income decline, and increased operating expenses have also contributed to this trend. On the other hand, there are fewer drivers of revenue growth mentioned in the report. However, online sales grew by 12.8%, and proactive tenant mix management generated double-digit sales growth in the lifestyle segment. new units issued, and capital expenditure for improvement works have also had a positive impact on revenue. Furthermore, specific segments such as Three Garden Road and Langham Place Mall have seen an increase in revenue. These factors highlight the importance of adapting to market changes and investing in improvements to drive business growth. The company's financial performance indicates a significant improvement in its operating cash flow. In 2025, the company generated an operating cash inflow of $1,234,219, which is a substantial increase from the operating cash outflow of $1,023,419 recorded in 2024. This shift towards positive operating cash flow suggests that the company's operations are becoming more efficient and profitable, allowing it to generate sufficient cash to meet its financial obligations. The company's debt level and interest expenses have undergone significant changes in recent times. In terms of debt level, while the total debt remains unchanged at $14,455 million, there are notable increases in specific areas. Unsecured bank loans have surged from $275 million to $6,350 million, indicating a substantial shift in the company's borrowing habits. However, non-current liabilities, bank borrowings have decreased by $616,495. Regarding interest expenses, there is a decrease in both percentage and actual amount. Interest expenses have dropped from 4.4% PA to 3.8% PA, while total finance costs have decreased from $677,391 to $587,691. These changes suggest that the company has managed to reduce its interest burden despite increased borrowing in certain areas. The performance of various segments within the company's portfolio has been mixed. On one hand, Three Garden Road stood out as a top performer, boasting the highest net property income among its group. In contrast, Langham Place Office Tower and Langham Road Office Tower struggled, ranking lowest in revenue among their respective groups. Unfortunately, even the strongest performers were not immune to losses, with all segments reporting a loss according to page 24. However, it was clear that some segments fared worse than others. Langham Place Mall, for instance, suffered from both the lowest net property income and a significant loss in its loss for the year column. Management is expressing a cautious optimism regarding the company's outlook. This sentiment stems from the stabilization and recovery observed in Hong Kong's real estate and business sectors. As a result, management believes that the trust is poised to capitalize on emerging opportunities. That concludes the financial summary for Champion Real Estate Investment Trust. Feel free to comment below, and I will be happy to answer them when possible.